I'm Dave Hunt, founder and wealth manager of Milestone Wealth. Today, we're going to be speaking with Cory Howes, an estate planning attorney based in Raleigh with the Strauss Attorneys Group. I want to welcome Cory. Cory, welcome.
Hey, thanks, Dave. Good to be with you.
So, today, we know there's a lot of discussion going on with estate tax laws and proposed changes. So, I think it's important for our clients to understand, first of all, what is the current estate tax exemption and how does it work?
Sure, that's a great question. Right now, the estate tax exemption is $11.7 million per person. And that's made up of what was the old exemption, which was based on a $5 million plus inflation. Effectively, it doubled under the tax law changes a couple of years ago. That was scheduled to sunset at the end of 2025, but it may be sunsetting sooner than that, depending on current tax legislation. And then just a couple other things to know about it is it works from the bottom up. So use the old one first before you use the new one. In order to use the full exemption, while we have the larger one, you have to give more than what is this year, 5.85 million. In addition, the tax rate on assets that exceed that amount scales up for the first million, but is effectively 40% for most folks.
Very good. Well, as we all know, Cory, Congress is currently considering a number of tax proposals. What are the key issues with respect to the estate tax that we need to be aware of?
So there's a lot of changes that have been proposed. The most recent kind of major proposal was from the House Ways and Means Committee a few weeks ago. And that is proposing to speed up the sunset of the increased estate exemption to make that, instead of being at the end of 2025, being at the end of this year. And so for folks that have taxable estates where that would affect, their taxes, then it's important to make some adjustments and address that before the end of the year. There's also some other very complex rules that are proposed to being changed. Most importantly, with respect to grantor trusts. And right now, you can use a grantor trust and get the assets in the trust out of your estate. Under the new proposed rules, any grantor trust would be part of your taxable estate. And there's a bunch of other stuff that goes into that that's probably more detailed than what we can get into here. But the common tools that we use that these rules affect include irrevocable life insurance trusts, referred to as ILITs, grantor retained annuity trusts, referred to as GRATs, intentionally defective grantor trusts, or otherwise called IDGITs, and spousal lifetime access trusts, which are called SLATs. All of those have been just key parts of the repertoire for estate tax planning for years. And these proposed changes are going to drastically affect our ability to use those going forward. The good thing is most of them are grandfathered in. And so to effectively utilize those, if this law passes, people have to do the planning before the law passes. So time is of the essence with respect to that.
Obviously, very concerning, Cory. So if someone has a taxable estate, what should they be doing now?
So the number one thing is call your estate planning attorney, call your CPA, get as much information as you can and find out, number one, if there's anything you should do either before the law passes or before the end of the year. And secondly is if you have existing GRATs or IDGITs or SLATs, you need to talk to your attorney about if you need to make any changes to those between now and when this law could pass.
So obviously there's a lot going on, Cory, and it's tough for the average person to keep up with all these proposed changes and probably even if they do turn into actual changes. So what's the best way for someone to contact you?
Well, probably phone or email. My office number is 919-825-0932. And my email address is Cory, Cory, at strausslaw.com. And that is STRAUSS law.com.
Well, Cory, we want to thank you for your time and for your key information here. And we encourage people to be proactive, especially if you feel that you have a taxable estate. Contact Cory or your own attorney and take steps to set your family up for success in the future. We thank everyone, and we hope this information has been helpful.
Thank you, Dave.